everyone, welcome back. You're watching Market Fatafat right here on ET Now. And before we start the show, before we start the countdown of the top stocks you need to watch out for, here's thanking all you viewers. Once again, we are #1 when it comes to the ratings. Last week, 47% of the share has been captured by ET Now. So viewers, once again, thank you for placing your trust on the channel. We're officially India's #1 business news channel. So thank you viewers, and of course, keep watching ET Now, your destination for everything related to business and news. Okay, well, let's take a look at the markets. Meantime, it's the 5th straight day of a decline. It's the longest losing streak that we have posted in at least 4 months, and we are sub the 10,750 mark as well. 0.5% gone for the Nifty. The Sensex losing about 151 points. The broader market's not faring any better either, with the mid and the small cap index losing between 0.3 and 0.5%. There you have it on your screens. It is mostly the metals and mining space that's losing significantly. The energy space in general, that's very, very weak. So today, some of your top losers are the OMCs, HPCL, BPCL and IOC, that are putting pressure on the market. And then you also have names like Hindalco, Coal India and JSW Steel that are among the top Nifty losers. However, cannot flag off the markets without talking about Yes Bank, which is 21% higher. All right, let's talk about earnings then. Gulf Oil has delivered a strong set of Q3 numbers, a revenue jump of 30%. Margins, however, have compressed a bit, but profit growth as well has been maintained. So let's bring on board then the management to talk about the numbers. We have with us Mr. Ravi Chawla, the MD of Gulf Oil Lubricants. Mr. Chawla, good morning and appreciate you joining us on ET Now. Top line growth stellar, 30% of a jump. On the bottom line, there was a 17% rise on account of the fact that the margins did not really keep pace with the top line growth. So start off with what went by in the quarter, and more specifically what went by in your margins.
Well, you see, this has been a record quarter for Gulf Oil Lubricants. The highest growth we have had, the highest in terms of revenue and profits. One of the key reasons has been that we have been on a very strong growth trajectory right through this year. Over the last decade, we have been growing 12% CAGR volume. But this year financially and also performance-wise, we have seen a close to 20% increase in our core volumes. And that has been one of the reasons where we have done positively well. We have had challenges on our foreign exchange, which was in the previous quarters. But this quarter, we have seen that we had a large institutional order, which also helped in the revenue and growth. And that is why the growth is crossing 30%. And that has been definitely an excellent quarter for us.
Tell us about the impact of the base oil prices coming down, crude oil prices coming down. How exactly does that work into your margins?
Yeah, so if you see the earlier part of the year or the mid part, we had a challenge on the rupee depreciation. So base and also crude had its ups and downs. So there was a bit of stress on that, but we have taken price increases, and we generally go at a range of 16 to 18% percentage margin to our EBITDA. And this quarter, which has just got over, you've seen it's slightly lower than that because we had the institutional order, which is a lower margin order. But if you take that out, we are still in the range of 16 to 18. And going forward also, we see that this is definitely going to be our endeavor to try to be in that band. And as we speak now, the prices have stabilized a bit on the base oil. The exchange rate has also stabilized. So going forward, definitely we see that margins will be having a positive impact. And the market also, we see that all our segments which we are focusing on have given us excellent growth. Whether we take the channel OEM segment, where we supply to the franchisee workshops, we have taken the industrial segment, the infrastructure segment, exports is doing well. Channel retail for us last quarter was slightly lesser growth because the base is high and there was the price increase impact. We see that also becoming very positive for us in the Q4. So all in all, positive outlook, and definitely margins should also see improvement.
Okay, so margins will see an improvement going forward. Let's talk about the top line a little more in depth then. How was the volume growth? Because in general, the industry this quarter did manage to post quite a steady volume growth number.
Yeah, as I mentioned to you, if we take out the institutional order, our core volume growth is 20% plus, which is really positive. And across segments I mentioned to you, we are growing. And whether we take the personal mobility, where we have grown double digit, and we are looking at the rural growth, which is again a second leg of distribution which we have started. We have seen that it has been very positive. Infrastructure customers who we cater to have also started buying more. The season is right for that, and tractor has done very well. So the tractor related OEMs and our own tractor products, and for us it's very important strategies which we have put in place, those are paying off, whether it's distribution expansion or the brand, or we look at below the line activations like service camps. Some of the new products that we have brought in are also helping us, and we have brought in a new range of long life greases. For example, we are now bringing in some coolants. We have just finalized a tie-up with Tata Motors for the passenger car segment, passenger vehicle segment. That will come into sales so shortly in the pipeline. And these are the initiatives where the growth rate trajectory for us has moved up.
Okay, and how did your ad spends and other expenditure pan out during the quarter?
Well, we have a range of our ad spends which is normally 6%. Sometimes more depending on the campaign. So we continue to invest, and for us the ad spends are also the campaigns and which come on the media, television, radio, outdoor, and below the line. So we've continued our plans, and of course when the exchange rate was a bit tough, we did delay a few campaigns, but we are going with our plan, and we continue to invest in our motorcycle range. We have also putting some signages and various things in the rural segment. Below the line for us across segments is a key initiative, even supporting OEM businesses by having a number of camps, service camps, seminars for educating people. So we continue to focus that, and B2B also we are focusing a lot on seminars with customers. We do a lot of retailer meets. We have launched retailer loyalty programs, mechanic loyalty programs, and that has been always part of the Gulf Oil strategy, which is definitely helping us to grow much ahead of the market.
Okay, Mr. Chawla, great getting in your word then on what happened in Gulf Oil Lubricants during the quarter gone by. We wish you all the very best for the forthcoming quarters. Well, from one management to another, Max Life's MD and CEO Prashant Tripathi remains extremely bullish on the life insurance industry. Speaking at the sidelines of the Edelweiss India conference, Tripathi outlines their roadmap for the company and the sector going forward. Listen in.
I think overall question with respect to industry is potential. How well are we going to grow? What is the roadmap ahead? And personally speaking, I'm very bullish on the industry, because whatever has happened in the last 2-3 years with respect to the growth rates and overall health of the industry, it just is a beginning of an extended growth run for life insurance industry, predominantly because of change in saving pattern and more savings going towards financial saving. So I feel really good about, and within that, of course, there were questions with respect to Max Life and how well Max Life is doing. Very proud again. We are doing very well. So a good story to tell to investors.
So what's the couple of specific points which you have tried to drive home with these investors, with you at the helm now? How different would your leadership approach would be to guide the company ahead? Areas of your attention.
Yes. So let me give you an answer broken into two parts. First, with respect to our performance, and then the road ahead. Performance, suffices to say that in last many years, this has been the best 9 months. We are growing close to about 21%. Our VNB, value of new business, is growing 37%. Across the board, all the parameters, margins, sales, everything is looking really fantastic, and we are gaining market share. So Max Life as a company is doing very well, and it is always good to surpass the market in terms of growth rate. So that's a good story. Looking ahead, I think there are 3 or 4 core areas of focus for Max Life Insurance. A, we need to focus a bit more on building our own channels, and we began that strategy early last year, and that's working out really well, because our own channels are growing double the rate of our partnership channels. So that's the first part. Making sure that we have good relationship with our partners who contribute significantly to our business. Be aggressive in growing through acquisition of new channel partners. That's around growth. So first is growth. Within that, be prioritized, be focused, and try to drive. No company will succeed without customers, and thinking about customers. So customers actually are very, very important from our perspective. We are just trying to make sure that across all the vectors of customer centricity, we are top quartile and try to be number 1, 2, or 3. So those are two big things that we are trying to do. In addition, there's a big need for protection, as you know. While insurance penetration in general is very high, but protection penetration is low. So we are just trying to drive protection penetration and become more protection oriented. We are one of the highest sellers of protection business, individual protection business in India. So those are 2 or 3 things.
Because insurance historically in India has meant endowment and of course you will replace it. But now people are realizing the importance of protection and well, that is there. But apart from that, how the operating metrics looking? Do you think the ROE can go above 18% or higher, or the distribution, how much can it expand going forward, or what are you taking steps towards?
That's a very good question, Ajay. Actually, we are already what we call as 20-20-20 company, which means we are 20% VNB growth, 20% margin and 20% ROE. We achieved that last year. The new vision is to be 25-25-25 by the year 22. So, you know, that's definitely possible because we are making investment in our own channels. We had about 205 offices for about 7-8 years. This year we have made further investments to grow that to about 350. So we are almost adding 60% more units. So we are going to grow our own channels. That should be the path to achieve 25% growth. Margin comes because we are trying to do more protection, more non-par designs, so that will lift the margin to about 25%. Plus you grow, you get operating leverage. If those two things happen, then 25% ROEV is definitely possible. So our vision and aspiration is to target 25-25-25.
Welcome back. You're watching Market Fatafat. This is the countdown of the movers and shakers today and trade, and boy do we have a lot of them today. So this is going to be an exciting show. Let's bring on board then our guests who are going to be joining us. We have Kunal Bothra and Vinay Rajani, the technical analyst with HDFC Securities. Good morning, gentlemen. Thanks so much for joining in, and I cannot start off the show without talking about Yes Bank, the big mover today in trade. A 21% uptick coming in, this after the market is heaving a sigh of relief that the bank has reported zero divergence. It has met asset quality norms as per RBI, and this is something that the RBI themselves have said. The risk assessment report of the RBI has said that nil divergences in the lender's assets classification and provisioning from the central bank's norms. So this stock has seen maximum trade in terms of value as well as volume, and thus merits a mention, the top mover and shaker today in trade. Kunal, let's talk about Hindalco. After the numbers came out, a lot of people call this stock attractively priced today. However, it continues its decline.
Absolutely, Mubina. So that pause which we had seen for metal stocks when they had when they were accelerating in terms of fall, that pause has now resulted into the stock continuing to drop further lower, and that's not a comforting sign for these names. I believe that most of these stocks are already trading below their long-term averages, and with this renewed signs of weakness, prices breaking down yet again of key support levels, Hindalco I believe now should head towards at least a 180 to 178, which is the next strong support level for the stock price.
Okay, so that's Hindalco, that's declining 3% today in trade along with the rest of the metals pack. Another big mover, Vinay, is CG Power. Yesterday we saw a massive decline come by, and today a mega reversal over there. Of course, not to the extent that we saw the crash coming by. So Vinay, what would you make of this volatility in the stock price?
Yeah, good morning. CG Power has surged more than 20% today. Primary trend has been bearish. It has been making lower top, lower bottoms, indicators, oscillators, everything is looking bearish. But if we look at the long-term support, in March 2009, CG Power made a low around 20 odd levels, and today's low is also coinciding with that level. So I think it is at the 10-year low, and 10-year low, which was the March 2009 bottom, it can act as a strong support. And same we are looking at, the stock is rising by 20% today. So I think this can extend the rally. I think 36 is the next target. So I don't see this level to breach in a short term. 20 is a very strong support, and investors should wait with that stop loss in the mind. So I believe that this can continue up to 35, 36 levels in the coming days. So I am a bit hopeful. It has reached around long term support, and in the coming days it can extend this rally towards 36 odd levels.
Alright, so that's a strategy Vinay is recommending on CG Power, important one given the massive volatility witnessed and the pricing action witnessed here. Kunal, why are you flagging off a Balrampur Chini?
Well, I think that stock has been, into at least my radar, and many of these sugar space, sugar-related stocks, Balrampur Chini, whether it's Dhampur Sugar, etc. And these stocks are showing some, very strong price pattern formation. So point number one is that these stocks are moving devoid of the market volatility, which is a good aspect, especially in the kind of, conundrum the markets are going through. But when you talk of Balrampur Chini specifically, there are some bullish flag pattern breakouts on the longer term charts, and I believe with those breakouts, you could see the stock scaling up much higher levels from current 115, 116 mark as well. So that's a buy, targets of 125 and stop loss at 110.
Okay, and it's just about near the day's high, Balrampur Chini. Vinay, what are you observing in a Motilal Oswal today?
Motilal Oswal has been passing through the bearish phase. Indicators, oscillators and everything, price and volume setup is showing the weakness in the index, in the stock, and we should not try to catch a falling knife. But if you look at the overall weekly and daily charts, it looks oversold on the short term chart. So I believe that instead of selling at this price, you should wait for the rally to come. It looks extremely oversold right now. I think it can give some pullback rally towards 650 odd levels. So on rallies you can exit this stock, but not at this price. So I see oversold levels at this point of time. You should wait for rallies to come, and on rallies you can sell this stock. So I see 650 in the near term. So you can take a view of sell on rallies in this particular stock.
Okay, 3.5% high, and Vinay is saying that you should consider selling the stock on rallies. Kunal, HPCL, the entire OMC basket today is declining in trade. What would be your view here?
Yeah, it's quite surprising, Mubina, because for the last 2 weeks, in fact 3 weeks or start of 2019, these stocks were in an extremely tight range, and 3% or 4% was the kind of band these stocks were trading for the last 1.5 odd month, and then you see all of a sudden a sharp breakdown of that key support level. So that range has gotten breached. The indicators are now suggesting that these stocks could drift lower even from current levels. So I believe HPCL, particularly which is trading at 216 odd levels, could drift lower another 4-5%. 205 should be a next target for the stock price.
Okay, so that's HPCL today as well. It's down 4%. Vinay, you have a bearish stance on a Repco Home?
Yes, for last 5 months, Repco Home has been trading in the range of 300 to 425. So 125 rupees range is there for last 5 months. But if you look at the primary trend, it is bearish, clear-cut bearish. I think from the NBFC space, it looks weak on the charts. I think you should, if you have in your portfolio, you should switch to some good quality stocks. I believe that Manappuram Finance is better placed, Bajaj Finance is better placed from amongst this NBFC space. So you can switch it over to some good quality stocks, and Repco Home Finance looks weak on the medium to long term charts also. So I would advise switching to some other stocks in the NB space, like I said, Bajaj Finance and Manappuram, and short-term traders also should avoid this counter.
Okay, so if you want to stay in the NBFC, Bajaj Finance or Manappuram are better bets according to Vinay. Kunal, Hero Motor is finally seeing some green on the screen today.
Absolutely, Mubina, and this was one of the calls which I had given a buy call yesterday, especially when at a time when the stock was trading at its day's lows. The indicators, the oscillators, and especially the kind of volume movement which was happening in the last 3 days of stock price correction, somewhat was different than what it was maybe when the stock was rallying from those 2400, 2500 levels, and that I believe is an indication that the new trend for Hero MotoCorp should be on the upside. So I think today it was up 4.5%. It's cooled off from those days high, but I still strongly believe that the stock should try and scale back to the previous swing high, which is roughly around those 3000 mark.
Okay, there you have it. That's the view coming in on a Hero MotoCorp. Vinay, GMDC today is taking a knock of about 3%. What would be your recommendation here?
Yeah, stock has registered new 52-week low today. That is because of the weak result which company has posted recently, and the trend is bearish. There is no doubt about it. But if you look at 2018 high, it has corrected more than 60% from 2018 high. So I am not giving any false hope. It could bounce, but I think that rally should be sold into, and it looks a bit oversold on the charts. And I think after the event, the result which has been posted by the company, I think you should wait for proper bounce, and on rallies you can sell. So at this price, I am not recommending to sell, but yes, you can easily see a bounce of 20 to 25% anytime. So those rallies can be utilized as a selling opportunity. So I would recommend sell on rallies in this particular stock.
All right, yes, the stock price certainly reacting to the Q3 numbers, and according to Vinay, it looks a bit oversold on the daily as well as the weekly charts. Kunal, let's talk about Dhampur Sugar, another sugar stock you're flagging off after Balrampur.
Absolutely, Mubina, and Dhampur Sugar also is sort of mimicking the same charts for Balrampur Chini as well. The stock is already at a multi-month high. Volume patterns have been quite robust. The stock is trading above its key moving averages, both 50 as well as 200 moving averages, and this is rare in terms of mid-cap stocks in a market like this. So I believe that the drift, the inertia, and the trend, all three of them are on the upside for many sugar stocks, and I flagged off Balrampur Chini earlier and Dhampur Sugar now. I believe that stock could now rally to almost 205, 210 levels as well over the next couple of weeks.
Okay, 4.5% higher today for Dhampur, and it's another sugar stock that Kunal seems to be quite bullish on. Vinay, let's talk about Tamil Nadu newsprint. A lot of these paper names have seen quite a steady up move, especially after they've delivered a strong set of Q3 numbers. However, you say that this one in particular is an underperformer. So what are your observations?
I would recommend one should, if somebody is holding in the portfolio, TNPL should be switched over. The international paper looks better on the charts. It posted a very good result, and on the charts also it's trading above all important moving averages. So I think if you want to really invest and trade in the paper stocks, I think international paper looks better on the charts, and that should be used for a long strategy. So I would recommend you should switch TNPL with the international paper, because overall primary trend has been bearish for TNPL, and the rising markets also it has not been moving up. So I would recommend switch to international paper from TNPL.
Okay, switch to international paper within the paper space as opposed to TN newsprint, which according to Vinay has been an underperformer. Well, gentlemen, Vinay as well as Kunal, thanks so much for joining in on Market Fatafat and flagging off your recommendations right here on ET Now. Once again, we'd like to take the opportunity to thank all our viewers as well for tuning into ET Now, for keeping the faith in the channel, to always bringing you top news when it comes to business. And we'll wrap it up on this edition of the show. Markets at Noon comes up next.